What up, everyone? All right, it is, that took a long time. It is Tuesday, September the 10th, 2024. Good to be back. Interesting day in the markets, but before we get to that, even on low volume ahead of tomorrow's CPI number, just a reminder, yep, I'm going to be doing my CMT webinar tomorrow, so log on, register. I have a link. You should have seen the link in a bunch of my socials today. It's at noon. It's going to be a good recap. It almost feels like, New Year's Eve type time. I'm doing a year in review, basically, but of the past 52 weeks. I like to look back better than just, year to date, 9 months in, right? So more legs to those trends. We'll see which still are sustained and which have, causes for concern. Okay, so let's share my screen and look at the headlines today of stuff that mattered. Before we get into it, S&P's closed up 50 bips. That'll summarize the day. We'll take a look at the chart, but it was an interesting day, and the reason why I say that is real estate just chomped along here to new 52-week highs. This trade is looking just great in anticipation of the Fed cutting and then some. There's a couple of reasons for it. That is a big one, but this trade really started getting legs a couple of 2 months ago if you were lucky and you were still joining it late after it broke out, and now it looks it's marching, and it's marching with some other assets. Bonds, every bond ETF hit a 52-week high today. Your IEF, IEI, TLT, all the bonds, again, less of a relationship. Prices at the highest, yields are at the lowest, again, ahead of the Fed cutting next week, kind of like an orchestrated trade. If you knew that the cuts were coming September 18th, you could buy TLT, a month before, mid to late August. Sometimes it's that simple if you're disciplined. A lot of people don't do that. So yeah, real estate, nat gas jump. We'll get into the percentages in a second. Real estate was up about 2%. Big move. They have 52-week highs as well. Your VNQs, IYR, XLRE, a lot of REITs hit 52-week highs. Nat gas jumped 4.5%. We've been waiting for that to continue to rise so I can get my sell ticket in. Let's see if it's almost there. And software, a big day because on the back of Oracle, up 11%. Software tech was up 1.5% today, a nice gainer. And oil, this trade continues to go lower. Oil going in really bad places below the Japan crash on August 5th levels, and then some. We'll take a look at the charts. And banks really been getting hit. Banks, one of the hottest areas of the past year, but in the past week and today, getting hit pretty hard, 2% today. There was news yesterday on the Federal Reserve raising capital levels. And of course, this adversely affects different banks. JP Morgan was down massively, and you had a lot of regional banks down today. But before further ado, let's get into the charts. We'll start with the intraday. That's me. High. You can put in a ticker or whatever if you want me to look at it. I'll get to it at the end if it doesn't throw me off. So here's intraday chart. Pretty interesting. Why I say this was a low volume day. We were just chugging lower all the way to noon, pretty much all sales. And then it was literally all buys. Not massive volume, but a big hefty bar here. More buys on the close than there were sells on the open. Shows me that there might be a little bit of follow through tomorrow. Not heavy resistance, but the near-term resistance is the 200 candle moving average that I use here, and that's at 552. So a little bit of a lid on top of where we currently trade. And VWAP, we held it successfully today, starting at 130 when the turnaround really started to gain legs. So again, 1% gain from 544 to 549 in the SPY in just this afternoon. We are less than 3% away from new all-time highs. Pretty difficult to be super bearish this market. Been thinking about it quite a bit about the new leadership. If we lose semiconductors and it's more so this real estate, that's okay. Rotation is the lifeblood of a longer bull market, and this market could have 2 to 3 years more to go, just based on longer term if the AI movement is in earlier innings, although I know there is charts out there. Goldman Sachs was circulating about ChatGPT not having nearly as many logins since May. Some people think because kids are out of school, but the data was different last year. Whatever it is, there's also more generative AI. Regardless, I think the cream is going to be in the market for quite some time. And we are less than 3%. I wouldn't really go insane selling, but the seasonality is against you for the next 4 weeks or so. This is not a time to scoop up the market. You rarely are rewarded, but it's good to see it hanging in there. Zooming out, again, so I think for the next week or so to 2 weeks, I think you have a bottom right around 530, 535. Tomorrow's not a huge CPI print because we know what the Fed's going to do essentially next week, whether it be 50 bips or 25 cut. but the CPI doesn't have maybe the same exact importance it once did. But you might get a little vol expansion here, and you see the Bollinger Bands go a little lower to about 535. I still think you hold this rising 200-day moving average. It looks absolutely beautiful. One of the best charts in the market is your U.S. S&P 500 stock market. And then we should probably mean revert and settle right around 550 to 555, and then try to make a move towards 570. I just think that's going to take probably till the end of October to get us to the new all-time highs. End of September, what we're heading into mid-September to early October is not the funnest part to be an investor. In fact, historically, it's the worst time. So you're going to get disgusting, down 3% Q days probably in 2 weeks' time. So brace yourself. Heard it here first, I guess. Probably not. Okie dokie. So let's look at the charts today, stuff that mattered, and if there's juice in it. So real estate absolutely trucking along here. One of the best trades in the market, the best one or the biggest mover today on a multiple sigma deviation movement, up 2%. Massive move. I'm trying to get an entry here. I don't like buying things here at the upper bar, but if you're a breakout trader, that's a wonderful trade, pretty easy. Here is very interesting to see, right? This started getting juicy. This real estate group started really getting juicy in July because it was basing where it was, basically back where it was when we were celebrating Christmas, okay? So it was doing this basing between 40 and 36 for about 8 months or so, 7 months rather. And now, right when it started to become overbought, you saw this blue shade erasing its old sold characteristic. It really started getting its legs underneath it. The date specifically is basically Memorial Day weekend. It had an oopsie here, so I'll even give it the strength going back here to May 8th. Could be possibly, many factors, rotation, underpositioning, anticipation of the Fed, with the Fed fund futures really starting to imply that the Fed was cutting, as soon as, 3-4 months after that. Regardless, there's many factors, but this really started to get some slope in the 200-day moving average. And then even when the Japan crash, nobody told real estate, unaffected. Doesn't matter what was happening with the yen, dollars, tech trade. Nobody told real estate, and it continues to truck higher. So now, where do we go? I'd love to get an entry at 43. It's tough because this has ran so much. Look at the current trade, how far we are away from the 200-day moving average. At the end of the day, let's be honest, this is real estate. This isn't, NVIDIA selling out, X amount of $1 trillion chips or whatever it is that they do on the daily into 2026, So this does have somewhat of a cap, but it is one of the best trades in the market. All that being said, personally, I would love to get in at 42. I don't think it's going to happen. Probably closer to 43 on a flush. But then my target's only about here at 44. So to get back to these current levels. So ease a little bit of this trade. It's ran up a lot. 10% is from 41 to present. And we were just there literally 3.5 weeks ago. So trees don't grow to the sky. Let's look at one of my other favorite charts, net gas. Because of the other side, net gas, I believe is, I'll talk about it tomorrow in the webinar, is the third best trade, I believe, of the past year in absolute terms, down 45%. It's a beautiful short. It continues to be. Here you had a bullish divergence, meaning the price reached a 52-week low, and you didn't even get oversold, let alone, undercut the previous level. So you had a little short-term immediate bounce, but look where we are here, right back to where we were basically in that median trading level going back to mid-July. Now, while I think this has a little bit more lift, I was kind of encouraged to see what we had today, up 4.25%. I think this actually continues to move towards that 15 to 15.5 level, actually. And I think that's going to be the signal. I wish it was a pretty tag all the way up here to 17.20. That would be just like crash dummy, easy trading. You sell it. It's done it all year wonderfully. I don't think it's going to be that easy. I'm not even seeing expansion of the upper Bollinger Band. The bars just aren't that big, the inputs that are going into it. So I think 15, if you're lucky, and I think that would be my sell. That's 93 cents away from here, or 5% more. I'm going to look for in the next week or two and put in probably an October or November put spread. Always still got to be a little bit finicky, not finicky, but careful trading that gas going into winter. There's sometimes different expectations, especially in Europe, dealing with milder or cooler winters and the demand on that gas. So just check it out. But regardless, technically, that's what I'm going to do. And then IGV, that on the back of, I yell because the air conditioner's on the whole time and then it shuts off. So I don't have to yell anymore. Okay, so IGV, this is on the back of Oracle. No, Rocco wants to say something. Rocco, buy or sell IGV? Nothing at all. So IGF, this was encouraging. This might be the thing that this needed. This 200-day moving average is really, it still looks good, but when you put your highs in, it's 2 months and a week now ago, you got to be careful that you're going to lose momentum. This looks like a good pickup, though. To be frank, my entry in here, I would look for right around 85 even, with a target of around 80. I think you're going to get some expansion here. I think this will go to about 88.5 to 80, probably 87. I'll pair my expectations of this just because of the seasonality and everything in the market. But this does have calculated and a little bit of difficult resistance at 87. It hasn't really been able to do it for 2 months now. So as investors and traders rotate into other areas, this area is not as hot, though still strong. So that is my call for this. Good pickup here if you get it around 85. Awesome if you get underneath that. But curb your enthusiasm. I think your target should probably be close to about 88. Alrighty. And that was up for the big up moves today. Now for the big down moves. Oil, we wrote about this at length in the whole group. Rocco, you're not going anywhere. This silly puppy. So oil looks horrendous. The 200 moving average is still like a rock right there at 74.40. It has not been able to trade there even for a week of consecutive sessions for quite some time. I mean, back to July, and it was different, trading very differently then. So now what in the short term? I think it's very close to bottoming. I don't think the selling is quite done just because of how, that's an ugly looking candle. So maybe you get down to 66 again. But near term, I think this does mean revert. Try to make a stab at this 200-day moving average of 74.40. I don't think it does it. I think it comes to about 73.5 and then starts to get towards these levels again in the 66 to 74 range. This is a recession trade. This is a lack of global growth trade. And I didn't want to go so heavy in energy here, but all the down moves today were significantly in energy and this whole complex. So PDBC, this isn't just oil, it's Brent, it's crude, it's a couple other basket of commodities as well. This actually put in a 52-week low today. Usually when you see one very heavy, rich asset, especially the commodity space, or whether it be the IEFs last week and the bond ETFs and signaling TLT was going to make 52-week high, and voila, it happens. This is kind of emblematic and indicative, rather, of where USO oil is likely to go. If oil gets to 52-week lows, people probably aren't so bullish on the markets and the economy at large, whether it be cuts or not. So again, this is what we were saying when the market can anticipate the market's, the Fed's moves, maybe perversely, and even sell it off. But let's look specifically at the PDBC. This looks like it should have a little bit of support at 1285, but it gave up the ghost today and just sank through by about, to the tune of 1.5%. But I think this should find its legs around, maybe it goes similar forecast to oil, of course, because it has a lot of the same holdings, or it's a major holding of it. So maybe this goes down to about 12.5, a touch more, and I think this is going to try to carve a movement towards 13.25 over the next 3 to 4 weeks or so. And look at the heavy 200-day moving average on this. Hasn't been able to close above it since July 15th. Again, pretty similar to what we were talking about when the picture really turned for worse in oil. So different prospects, different trades in energy since July. Another one, this is XLE at large. So this is your Exxon Mobil's, Marathon Oil, etc. So Occidental. So in terms of chart, April 12th was the high at $99. I'm rounding. The 200-day moving average is still rising. So you don't want to throw the baby out with the bathwater. But let's see if the forecast is truly changing. I don't like charts that look like this. And typically, so right here, I start the clock. I start the counter, close. I will get really right to it. 88.91 is the 200-day moving average. It closed that day at 89.01. So I'll do it the next day. So right here, starting September the 4th, XLE closed below its 200-day moving average. I will give this to October the 4th to maximum October the 10th before you can throw in the towel on XLE, because imminently right after that, what you're going to see is 52-week lows for oil, and I bet you it happens well ahead of that, as we just saw today through PDBC. It's good stuff I'm giving at you. It's good stuff I'm giving you. All right. The banks were under a lot of pressure today. We saw what was going on with the JP Morgan and Capital Reserve ratios that have been rising. Federal Reserve announced that yesterday, and some of these banks got hit really hard. Let me just pull this up on my other screen. Okay, so this has been a super hot trade. You can't say many assets hit 52-week highs less than 2 weeks ago, and this bank index did. Just interesting to note for this, is it this index? Sorry, I was looking at something else. Sorry. Okay, so this one, yeah, like I said, topped last week at, just rounding the handle, we'll call it $60. Pretty hard sell-off here, and then kind of a rebound right to the median of where we were in terms of the prices today. So all that being said, I do think this support of around 55 even will hold. Knows the rising 200-day moving average, still a great trade. I would get in this if possible, and I'll try and give you a setup right here. I think 55 will hold. It'd be great if you can get that through some kind of September, fall market scary sell-off. Would give you a good opportunity, I believe, to get in here. It's a great trade, and I think the short-term target is 57, and longer is closer to 60. So see how the market trades. The longer-term targets are all going to October just due to the weak seasonality that we have ahead of us. So that is the target, but this is a good trade. This would be on my list too with home construction. Banks are a great place to be, especially if you're, heavy in mega cap tech and taking, need a little bit portfolio defensiveness. Brazil, tried to look this one up last week when the Eagles were playing there and won. So EWZ, new 52, whoops, hold on. EWZ did not make a 52-week line today. I'm sorry, my screen's getting nutsy. Okay, so EWZ, why we're talking about it is it's down 1.5% today, a multiple sigma mover lower. I think the lower band of around 28, I think you get a little expansion here. You can actually see it starting to curl and go lower to about 28.60. I think this is where this should find a low. It's about 2% from here. Doesn't look like the selling might not be done. And after that, over the next 2 weeks, if you're looking for a counter trade, you could possibly dip in this. I wouldn't, but this is just really weak if you think everyone's on one side of the boat. This is one of the weaker parts of the market, depending on your look back outside of the 52-week low that I did during the Japan crash. So this is a pretty weak index. What I think is it's going to try and bottom here, as I said, around 2065 and make a run towards 2965 and no more than that over the next 2 weeks or so. I nowhere near the 200-day moving average of 31. I would highly doubt that. Okay, moving on. Top 5 gainers of the past 5 days, no repeats in charts. TLT, number 1 gainer from the long side, up 3% to a new 52-week high today. We talked about it last week when we saw the other bond ETFs do it. And obviously where rates are moving, it's going to happen, and it did. All that being said, we said it was going to try to get to par 100 for you non-finance nerds, and it did just that. It actually got to almost par 01. That's not a thing, just this nerd says. All that being said, my target was 100, 101. This is going to, I think, put a lid on this for here, and I expect this to mean revert towards 98 over the next 3 weeks or so. And that's my call for TL Tizzle. Real estate, we already looked, but XLRE is the second best gainer in the past week. They're piling on this trade. They're buying bonds. They're buying real estate. Next one, the airlines. Airlines up 2.5% for the third best gainer. Let's look at this. Typically not a great space to be in, but you're definitely getting a broadening. Also want to note consumer staples, 52-week high today. I think some utilities hit 52-week high today, but I know consumer staples massive today. So there's definitely a broadening, and that's a good lifeblood of the market. Look at this. Airlines getting to a pretty tag of the 200 moving average. Is it an oopsie, or is this thing going to go lower? Let's see. This is why I like doing this. So I think this is going to go lower. I think this is going to move towards 1835. I think this was actually potentially your shot to sell this. The one thing that's giving me a little pause is this 200 moving average is starting to rise after being just rock solid and then really fell out of bed during the Japan crash. And now it's squeaking towards a 58 RSI, which is typically where it's crapped out in the past. Yeah, I think this is a good sell opportunity. You got to be patient. This is extremely hard. Not that they're all not. This is hard to time, though. And just going back on the same rule of what we said, giving, I think it was energy 1 month on the 200-day moving average. So you see this airlines really holding the 200-day really nicely until right here. And then I'll even give it this whole week of, this tug of war. It's playing this whole week. So I'll give it till August 1st. And now I'll give it to September 1st, September 10th. Yeah, that's about it. It could need more time, but I don't think so. I think this is a good selling opportunity. Just be able to capture. I'm not calling for the bottom or for this to fall out of the bottom rather, but maybe a move towards 17.5. So not a bad trade, $1.40 today. It looks like maybe it could be the start of that. Okay, next, XLY. Much of this is due to Tesla's crazy run and Amazon. XLY up 1.5% to be the fourth best area to be in for the past week. Let's take a look at the charts. Again, this is the Tesla Amazon fund. Pretty much if you have discretionary money, I guess you're going to buy a Tesla or you're going to buy something on Amazon, and they think they have you and your wallet spending habits pretty much on the wraps. They're probably right. So here, this could move a little bit lower. Be careful just because this is tied to the consumer. And if you have a, I don't know, weird reaction to the CPI tomorrow or anything else ahead of the Fed, this is going to be one of the first angles. But Tesla's been on a crazy run, which has powered a lot of this. The 200-day moving average. So again, the strength of the 200-day moving average and how it moves is like a battleship. It's very important. So this, I would have given this a month to say, XLY, get out of the way. August 2nd, September 2nd, you got to be a superstar. You got to be holding your 200-day moving average by then. It did it way before that. I did it on August 13th. So it had an oopsie of about 11 days. That's all. And it recouped itself. When you're giving jets and stuff like that much time, you're better off joining a different team. It's going to show its true colors, and it's likely to be a loser. Could be wrong, but TAN did it. The solar ETF, new 52-week low today. There's areas, XOP, 52-week low, and you saw similar movement like this. So give a month on the 200-day moving average. A lot of things turn against you very quickly. If it's like this, and it's just a short 1 to 2 weeks underneath, that's okay. So now XLY, I think this is going to find support. Worst case, if people get freaked out, 176 to 180. You have the support at 179. It could give you another oopsie and slip below that, maybe 178, something like that. But I think right around 180 should hold and probably spend its time getting between 184 to an ultimate target of 191 over the next 3 weeks. You're going to need market participation for that. But again, $4 on a nearly $200 stock is 2%. I think it'll do that, especially if Amazon and Tesla continue to chug. All right, and last, silver they've been buying, not massively, just slightly less than consumer discretionary. Silver is up 1.5%, 1.33% rather over the past week. Much of those gains, I'm sorry, it's up 0.3 today. My screen is acting up for some reason. Sorry about that. Beautiful chart here. Don't like that the 52-week high is back here in May, but like that the rising 200-day moving average is still has some slope to it. Don't like the lower highs. Yeah, I take back what I said about the beautiful chart part. I think this might have. I talk too quickly. I speak and then I think later, which just gets me in a lot of fights with everyone, including him. Someone just signed off. 2470. I see for a low in terms of where this goes, so it might give it some fears and get closer to the 200-day moving average here, which is still rising. So right back here is 2470, and then after I think it'll try to carve its way towards 2620. Basically close to where it is here. So careful trading this one. It might have another small flush towards the downside, and then I think it's going to be at around 2620, potentially 2675 in 2 to 3 weeks. Okay, top 5 losers of the past 5 days. XOP, we did not look at this just yet. Energy has been where the pain is. Oil, the oil and gas exploration names. So this I thought was actually going to hold right around 130 even, but the bottom gave out 130 just because it was inside of those Japan crash levels, and this thing's just continued to go down every day. 5 ugly close with volume. So this hasn't had a good day. August 29th was an up day. So I'm looking at 1 green candle since August 27th. That's not spectacular. And then again, 200-day moving average. Okay, I'll give you this, just as all this tug of war. And then right here was its first close under the 200-day moving average. August 1st. So I gave it to September 1st plus a week or so. It made a run right here. Oopsie, fail, and boom, 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 boom. Looks like people are trying to figure out the same thing I was. I don't think things are going to absolutely crap out, but once you see that, man, that's a tell. That is a big tell. So that's what I'm trying to keep an eye on with the other securities I was mentioning. I think this will at least try to base around 130, so you'll get a small, $3 pop, and then it'll try to make its way towards 135 over the next 2 to 3 weeks. Oil, we looked at already, USO, but USO, the second biggest loser of the past week. It's down exactly the same 6% as XOP. So XOP down 6, USO down 6. Not been a fun trade people smelling recession, people not smelling growth, even though apparently there's a new iPhone and it has battery and cameras and a screen in it. I think they did keep the same price though, so that's nice. Okay, and the next, Japan, still a bit of a scare. Japan, the third weakest area, so it's energy, it's Japan. That doesn't give you warm fuzzies in terms of growth in the market. Let's take a look. Japan down 5% in the past week. Again, the 200-day moving average, they had a global crisis here when we had their, they cut rates 25 bips. Their first close under the 200-day was August 2nd. I give it to September 2nd, but look what happens here. It only had a week and it recoups, and now it's starting again. So I start that cycle again, even though it's a little bit scary, but you have a rising 200-day moving average. You have a 52-week high within 2 months. I give you credit for that. But the counter starts right here, September 6th. If DXJ cannot get above its 200-day moving average by October the 6th, I throw the towel on it, and it should be a good short candidate, and 52-week lows would be imminent, and you can imagine movement like this and contagion that would happen here. Again, I don't think it's going to happen considering this is $2 away as we speak. My near-term forecast is this is going to probably put a base in around 99. Might have a little bit more selling, and this is going to make a way towards 104. I do think it's going to hold its 200-day moving average and be at 104, as I said, in about 2 to 3 weeks time. KRE, did we look at KRE already? No, we did not. So KRE, the fourth worst place. KRE down 4.5% over the past week. Today, not great day. It wasn't absolutely smoked like the other index I mentioned, but this was down 90 bips. Want to speed up here a little bit. The KRE, if you have a ticker or something, you can put it in the chat and I will take a look, whatever it is. So this looks like it's still on the way down. I think this has a date set with $52. I think it wants to go there to freak a couple more people out. It just doesn't look like the selling is done. And after that, I expect a nice hearty bounce to 55, basically back to where we are. All right, and then lastly, a chart I haven't looked at in quite a while, the XRT. XRT is really getting hammered. Again, recession trade, people aren't buying stuff, fear of the consumer, etc. Retail, here's a chart down 3.5% in the past week, just almost as weak as the regional banks or Japan. So an area of pain in the market. I thought the level of 72 even would hold. It clips it a little bit. Again, the 200 moving average is kind of like it's a hammer, it's a gun. You can use it for everything. So I started the count here. No, it quickly rebounded. Okay, so now retail right here, September the 6th, almost the same exact reading as regional banks. I will give this group until October the 6th. Give it plus a week, so maybe October 13th at the absolute latest. If it is not trading above its 200-day moving average, which is right now set at 73.55, this is a loser. You can sell it, and it's going to go lower, probably towards, I don't know, probably a 1 year 50% retracement, Fibonacci $67. So you would get, almost 10% movement from there. All right, and that's a great potential trade to potentially navigate fall sell-off, through put spreads. And if you're going to get a mover like that with a couple handles, you'll get paid on a spread. Okay, so best absolute trades of the past 5 days. If you were short oil or the XOP, congratulations. Best trade in the market. If you were short Japan, specifically through the DXJ because of the hedge yen dollar component, not EWJ, you absolutely killed it. And if you were short KRE, congratulations. You are beating the market. Those are 3 best trades of the past week. All right. Tomorrow, join me for the webinar at noon if you can. The link is on, you can find it on the socials, wherever you see this, and or email me or message me. And and I think I'll be back tomorrow for another show. All right. Peace. Rocco, say goodbye. You were really annoying.